So let's kind of pick up where we left off from last week. And I want to really go over some things that are taking place this week that could be very distractive and disorienting from a retail perspective to what institutions are really actually focused on. So in today's call, I want to really break down the current market landscape, talk about fundamentals thoroughly through so that way you guys understand what to be paying attention to this upcoming week. We're going to take a look at some technical analysis on XRP utilizing institutional deltas, combine them with fundamentals, and show you guys the level of accuracy in which we've been operating with over the past consecutive couple of weeks. I mean, honestly, over the past consecutive couple of months, but I just try to reiterate week by week. So that way we don't lose focus on intraday analysis and just keeping up to date with the moving tides. So let's share screen real fast. And I just want to first take your attention to this post here because this is something that you're going to see a lot of. And this is exactly why this community sets itself apart from the average retail investor. Because the average retail investor is manipulated and disoriented by retail influencers that have zero credentials in this space. They have no credibility delivering technical analysis. They've probably honestly never managed seven figures in this market, lost six figures, rebounced back from that, or even had a profitable rising equity curve for longer than a 6 month, maybe even 3 month long period. And that's probably 99% of retail investors on the face of this internet. And so that's why it's really important that you guys are paying attention to not only these Zoom calls, but the institutional delta updates that Scalper gives, because you guys can see in this video call today how accurate they've been, and how accurate they're going to continue to be. And then couple that with fundamentals and your understanding about current market dynamics, that we are in a headline-driven environment and that 95% of activity, I'd say, in the crypto space, I could be off a few percentage points, whatever, is primarily driven by trading activity, right? These algorithms, these large crypto native hedge funds, asset managers, family offices that are actually dipping their toes into crypto are the ones moving these markets, and they change their trades, their investments off of risk on, risk off environment, right? And so when you understand that that's the landscape, it allows you to stop believing in these high-end XRP price predictions and that price is just going to go up in a straight line. You guys know I'm a firm advocate and believer of a future higher price on XRP. I bought most of my XRP before it passed 11 cents. So yeah, I would love for it to go to $100 because I'll be a multi-millionaire. But let's dial it back and let's be a little bit more realistic and take things week by week like we do here. So I'm going to start off this because you guys are going to see a lot of this week as Fed Now or whatever it is goes live tomorrow. Don't ask me anything about that because I don't pay attention to fundamentals like that. Why? Because in my personal opinion, because of the lack of the utility driven environment that we're in right now, or excuse me, the environment that we're in via trading environment, this utility driven environment and narrative that everybody's expecting, it doesn't yet exist. It's coming and it will happen in my firm belief eventually, but tomorrow and this week, that's not going to be our focus. So let's clear the air on XRP, FedNow, and ISO 222. Yes, FedNow is significant for the US payment infrastructure. Yes, ISO 222 is important and it's a major shift in the financial messaging standard systems. But no, this does not mean that XRP is about to explode overnight. If you're serious about understanding what actually moves the markets in the short term, here is what you should be focusing on this upcoming week. And we're going to go over that in detail in today's video breakdown. So that way everybody in this community has a clear understanding of what would drive a continued risk on market sentiment, taking XRP price higher or Bitcoin's price higher or any other altcoin's price higher, or what could deteriorate market sentiment and give us further discounted opportunities to implement capital reserves that we have on the sidelines, earning yield in DeFi. These are going to be some of the real drivers of capital flows, risk sentiment, and institutional positioning right now, not hype and hashtags. Last week, the usual influencers were shouting $15 to $20 XRP price targets as the market was rallying. I'm sure you guys saw. Reality check, XRP barely cleared $3 before sellers tapped in. And in this community, we had mapped out a $2 to $90 to $3 range days in advance as the institutional sell zone, not because of hope or speculation, but because of precise delta flows and real-time market data. So you guys can see that in the reports. Here is a fundamental analysis from July 7th, where I had mentioned to you guys at the beginning of last week, I believe July 7th last week was Monday. At the bottom of that report, I said, I am still cautiously optimistic that the risk on sentiment can continue as long as we are above $3.1 trillion. That overall analysis held weight, and I told you guys what we would ideally like to see in terms of fundamentals to continue the risk on market drivers. And we got most of these things. De-escalation or progress in trade talks, we got some trade announcements that the market perceived as more optimistic than pessimistic. Confirmation that tariffs won't derail inflation or control or delay Fed rate cuts. We got that. Dovish comments from multiple different Fed speakers last week. We got that, including the FOMC meeting and minutes that supported a risk on market environment. And so all the fundamentals in the data last week continued to drive optimism in this space, support rate cut bets, and continue to trend risk assets higher. And that usually comes with, again, retail opinions in this market that get distracted by greed, that get distracted by these narratives that don't really hold weight in the market yet. Maybe they will eventually, months or years from now, but this week they're not going to. So let's remain focused. Then, like I said, our XRP analysis last week, we did multiple updates with you guys where I went over different TA breakdowns. We called out institutional deltas. This is the report that I delivered to you guys always well in advance. This was Friday, the morning of July 11th, before XRP rallied into $3. You can see timestamps are always important to me in this community. 8:26 a.m. right before New York session opened at 8:30 a.m., which is when the primary meat of institutional trading during New York session really starts. I always try to get you guys some updates before that meaty session or that meaty time frame during New York. And you can see I dropped this report 4 minutes before that took place. If we come over to that report, you can see right here, I specifically mentioned, should bullish sentiment persist, our next upside targets are going to be between $2.76 between the $3 range, right? And I gave you guys a little bit of a tag for the institutional deltas. And you can see this is when XRP was trading at about $2.54 on that day, on the morning of. And we had an institutional sell delta here at about $3 to $2.89. If you go and you look at the price action, that is exactly where buyers started to sell out, sellers started to show their hand, and XRP price action started to slightly retrace as we roll over into the weekend. So we're going to continue these accurate updates for you guys, always keeping you ahead of the average retail crowd, giving you guys realistic targets, taking things week by week. Could XRP price go to 15 freaking dollars? Absolutely. I'm not knocking that because guess what? If it does, I'm probably going to delete all my social media platforms and only solely focus on you guys moving forward anyway. So who really cares, right? Because I'll be a multi-millionaire. But let's focus on these intraday levels and understand the market dynamics that are going to get us to these higher prices in the now. And that is going to be a risk on market environment that we're going to need to see painted this week in terms of fundamentals. So let's thoroughly break that down. I have written out the report for you guys today. I'll make sure to deliver it for you all after we get off of this Zoom call. So at time of writing, the total cryptocurrency market cap has surged about $50 billion intraday. That was at time of recording, or sorry, excuse me, writing this. Let's go look at it right now. So no really change, no real significant change, still up about $52 billion on the day. As buyers are making an attempt to push price action above January 2025 highs. As you guys can see, interestingly enough, the same week that we're about to see inflationary data, the same week we're about to have like 6 different Fed speakers, the same week that we're about to have Fed Now go live, we are at a premium price in the total cryptocurrency market cap, where if we go back on the higher time frame, we are currently hovering out the January 2025 highs. All right. And so you can see right now, buyers are starting to stall, sellers are slightly starting to defend. And so in order for us to see a leg up in crypto, or for us to continue to push through these January 2025 highs, we need to see some type of bullish catalyst, right? Buyers are not just going to aggressively take bullish bets with no fundamental shift or change supporting risk on assets. All right. So let's cover that. This comes at the onset of one of the most crucial weeks for both economic data releases and geopolitical developments, including a wave of tariff announcements, ongoing earnings seasons, that's important, and multiple Federal Reserve speakers. Following our accurate TA and fundamental update on July 7th, we continue to stay vigilant this week. With the global landscape shifting rapidly, it is vital to remain both focused and adaptive as new catalysts unfold. So here is a breakdown of what we're going to be tracking this week across the board. Number one, U.S. economic data. Our primary focus is inflation, retail sales, and Fed expectations. There is other scattered data throughout the week ahead, but I just want you guys in this report on Sunday to focus on these things. And then every single day that we jump into the fundamental breakdowns this upcoming week, we'll focus more so on any of that other scattered data that we have scheduled throughout the week. The core of this week's macro focus is how markets interpret incoming U.S. inflation data in the context of ongoing tariff pressures. Last week, markets rallied on dovish Fed language, including comments from Jerome Powell, where he stated, if it were not for the tariffs, the central bank would likely have already resumed its easing. This puts enormous weight on how June inflation data will be received. Keep in mind that the inflation data is lagging. So in July, we're going to get June's inflation. In June, we got May's, so on and so forth. CPI is due Tuesday, followed by PPI on Wednesday. The key will be not just in the numbers, but how the Fed speakers respond after the releases, with multiple Fed speakers scattered throughout the week. So here is the ideal scenario, in my personal opinion, on how we would like to see the inflationary metrics come out this week in order for us to see a sustainable risk on market sentiment. You guys can thoroughly go through that. We'll talk a little bit about that here in a second. I don't want to confuse anybody or prolong the Zoom call with percentage confusion. We'll just talk about lower or higher inflation and how the market could react to that. But again, you guys have this table to do and compare my overall projection to what I would like to see. While the market anticipates a slight increase in both CPI and PPI, so that is important because that is what the market right now is anticipating, right? If you go and you look at the projections on trading economics or forex factory, the market is expecting both CPI and PPI to slightly increase higher than in previous readings. This contradicts the FOMC meeting in minutes, where most members indicated tariffs would have minimal long-term impacts on inflation, a key reason as to why risk assets last week remained supportive. And you can see the screenshot from the FOMC meeting in minutes that we highlighted in detail last week, where they specifically said this. It says most participants assessed that some reduction in the target range for the federal funds rate this year would likely be appropriate. That is a dovish comment, noting that upward pressure on inflation from tariffs may be temporary or modest, that medium and long-term inflation expectations had remained well anchored, or that some weakening of economic activity and labor market conditions could occur. Number two, the second thing that we're paying attention to this week is U.S. tariff policy, risk off by design, risk on by perception. President Trump continues to escalate trade tensions, announcing recently 30% tariffs on goods from the EU and Mexico, effective August 1st. This follows last week's 35% tariff threat on Canada and letters to Japan, South Korea, and Brazil. Keep in mind that last week we wrote a detailed report, I believe it was either Thursday or Friday last week, going over the tariff landscape and why the market did not perceive those tariff letters as negative, right? Because even though he sent out those tariff letters, nothing had been solidified yet, and he gave each jurisdiction room to respond and to possibly lower the tariffs that he imposed or, threaten them with. So the market perceived that as positive. And go back and read our previous reports if anybody's confused on last week's tariff landscapes, because we broke those down in detail. But overall, Trump's rhetoric is clear. The 30% number is far less than what is needed to eliminate the trade deficit disparity we have with the EU. The reason why I'm focusing on the EU is because those have been the most recent announcements. China and Japan, we haven't seen any recent announcements from the last report that we had written. Despite the aggressive stance, the market still remains optimistic, as we can clearly see in terms of price action today, that last-minute negotiations could de-escalate the situation. The EU has signaled readiness to retaliate via the I'm not going to butcher this. Cool. Yeah, I'm going to butcher that one. The ACI, it's an acronym here, if needed, while France and Germany expresses frustration, but still holds the door open for a resolution. And I highlighted this one tiny key part as to why the market, I believe, is perceiving this announcement as still optimistic. And it says here, Trump invited the bloc to negotiate further, writing in his letter to European Commissioner President Ursula von der Leyen that high tariff rates would be dropped if the European Union or countries with the EU decided to build or manufacture within the United States. So the market's still slightly perceiving this as room for optimism, for negotiations to continue, and for trade rhetoric to continue to improve, right? One risk that we are personally watching is that if higher tariffs are confirmed, does the market perceive them as inflationary or recessionary? If they do, this could start to kill rate cut hopes and it could spook risk assets. The third thing that we're going to be watching this week, outside of any announcement from any major jurisdiction, whether that be Japan, China, Canada, Mexico, EU, any retaliatory tariff measures or ongoing negotiations that might sour, we are going to continue to pay attention to the geopolitical flashpoints. Recently, Iran and US announced some positive developments. So, over the weekend, I believe this was yesterday that I found this report. Positive developments emerged as Iran signaled the willingness to resume nuclear talks, conditional on a halt to military strikes. Foreign Minister Aragachi stated assurance should be provided that the trend would not lead to war. And you can see here is a piece of that fundamental. The easing of Iran-US tensions reduces demand for safe haven assets, which is risk-on supportive. So right now, we aren't seeing any new geopolitical flare-ups or any headlines that are spurring demand for safe haven assets, which allows a more favorable environment for larger investors to have their capital allocated to risk. Outside of the geopolitical tensions in the Middle East, we are still focusing on any major announcements between Russia and Ukraine, and now combined with North Korea's involvement that could possibly sway market sentiment. Recently, North Korea reiterated its unconditional support for Russia, reaffirming alignment in the Ukraine conflict. Though no new escalations have occurred this week, this remains a wild card that could shift sentiment quickly if anything escalates further. So we are still monitoring this, and you can see this was a report from today. On Sunday, Kim Jong-un reaffirmed his country's unconditional support for Russia. So if there's any major announcements of any other conflict, escalation, major, freaking attacks, North Korea getting involved, United States getting involved with this announcement, who knows? At the end of the day, anything that sparks demand for safe haven is always something that could weigh on risk sentiment. So just be mindful of that. I thought that I'd throw that in there. Number four, something that a lot of people don't talk about. As we know right now, risk assets, including Bitcoin and the rest of the cryptocurrency market, are heavily correlated to traditional assets like stocks. I firmly believe that in the future, we will see a decoupling of that correlation. But right now, usually when the S&P 500 or NASDAQ or any other, futures markets are heavily risk off, we usually see that same thing reflected in crypto prices, right? So let's just be mindful of that moving forward. We do have a lot of earnings reports this week to be mindful of that could drive market sentiment in stock markets. This week kicks off major earnings that will test the market's optimism. Key releases include US banks. We have earnings reports from JP Morgan, Goldman Sachs, Bank of America, and we also have multiple tech industries earnings reports like Netflix and so many others, right? So just in a nutshell, strong results or strong earnings reports may amplify the bullish sentiment, support risk assets, while any earnings disappointments, especially in banks or chip makers, could hurt the market breadth and confidence in the economic cycle. So to wrap that up, supportive earnings reports or any strong earnings reports showing that these, companies are doing well, they're performing well, and they're earning well, that's most likely going to put some emphasis or some support behind risk assets. Inversely, if the earnings reports miss the mark, if they disappoint, and we start to see a sell-off in stocks because of those things, it's most likely going to weigh on market sentiment to some degree. Not going to have a major impact, but it would be ideal if we could just see, upbeat earnings reports across the board. That would definitely propel risk assets forward. The last thing that we're going to be watching this week is the tone of Fed speakers. As we do have multiple Fed speakers scattered throughout the week, we will go over these more so intraday as time progresses. So we will hear from multiple Fed speakers, including, I primarily mentioned these two in the report today, Fed Speaker Williams and Fed Waller, as historically speaking, they do have a bigger impact on market sentiment when they speak compared to other Fed speakers. I don't know why that is. I've just noticed that over the past 9 years that I've been a market participant. Ideally, we would like to see a continued dovish tone in light of any inflation data. That would likely be a tailwind for risk assets, tailwind being something that supports risk-on environment. We need to keep in mind that any hawkish shift or admission that tariffs could cause persistent inflation would most likely remove rate cut optimism and it could weaken risk sentiment. All right. So To wrap that up, these are five things that we're going to be primarily focused on this week as we progress and continue to expect a bullish, push in risk assets. This is what we would ideally like to see for a risk on environment this week, or to see higher XRP prices or Bitcoin prices or whatever your favorite digital asset is. Let's cover this thoroughly. All right, we'll take a look then at the total cryptocurrency market cap, and then we'll do an in-depth TA look at XRP utilizing deltas. So, what would support risk assets this week? Let's take it here first. Number one, CPI and PPI coming in below or at consensus with no surprise to the upside, or if inflation data does come out slightly higher, the market viewing that as temporary and having no negative effect on the rate cut path, i.e., the slight uptick that we could see in inflation, not high enough to deteriorate rate cut bets. This would be solidified if we did see a slightly higher CPI and PPI report, if Fed speakers the following day remained dovish. So if Fed speakers remain dovish, downplaying inflation and supporting future easing, that would be supportive of risk assets. Any Iran or US talk progress without further strikes or escalations. Any earnings beat expectations, especially from banks and tech companies. The EU and US resume negotiations to avert full 30% tariffs and or retaliations. And any major positive announcement on the tariff front from any other major jurisdiction as well, we need to be mindful of. We still have negotiations from Japan that we're waiting for, solidification from trade negotiations in China, Canada, Mexico, so on and so forth. No major geopolitical headlines from Russia, Ukraine, or Israel and Iran. And then last but not least, I did not talk about the retail sales that we do have this week. Ideally, we would like to see resilience in the retail sales figures, nothing excessively upbeat, but figures that still suggest that a soft landing is still intact. So if we can see these primary factors this week, and again, we could see a rainbow scenario where we get all of these things and crypto goes to freaking 4 trillion, $5 trillion, which would be phenomenal. Or we could see a scattered event where we see some of these things come into fruition, supporting risk assets, some things come out mixed, and we see choppy price action. So just be mindful. This is the ideal scenario that we would like to see painted this week to see continued optimism in risk assets. So if we do see these things, what could we see in the total cryptocurrency market cap? Starting there first and then migrating over to XRP. Currently, like I said, on the daily 12-hour time frame, we are currently hovering at around the 2025-2024 highs. Markets are starting to stall. I'm going to go out right and assume buyers are repositioning themselves, allowing sellers to slightly show their hand and defend at higher prices as we reassess market conditions this week with a major economic data docket on the forefront. If we do see those things, taking a look at last week's low, so we can now move these things up, previous weekly high, we're going to put that at 3.68 trillion. Previous weekly low is now going to come in at 3.28 trillion. And so ideally, this is now our new A to B range. So that means in a continued risk on market environment, we could see one of two scenarios. A scenario where buyers don't take any aggressive bullish bets, sellers start to show their hand intraday, push price action back down into lower prices, possibly allowing buyers to defend at lower prices, whether that be a full-on retracement of this weekly push to come back down into the weekly low from last week before buyers defend. That could be a scenario that we see this week. Scenario number two would be a medium retracement back down into, let's say, $3.48 trillion or last week's midpoint before buyers defend to take prices higher. Or we could just see a continuation and a breakout from where we currently stand. A retest of the recent highs from 2025 and a continued push to the upside. If we see these things this week and we see no risk off headlines or any fundamentals driving demand for safe haven, weighing on risk sentiment, then this is the likely scenario that we're going to see unfold this week. As long as we remain above the previous weekly low, which now comes in at $3.27 trillion, the path of least resistance still remains to the upside. Right now, that's what it looks like. D'Angelo, I'll give you a second. That's just right now the current analysis. All right. So for the uptrend to continue, this is kind of what I'm painting this week that we need to be mindful of. And if we did see a pullback into last week's low, that is definitely where I would go in and possibly consider starting to deploy some capital. All right. As that would definitely give us a opportunity where we see, let's take from current trading levels down to last week's low. That would be about $356 billion that would need to be shed from the market at current time of recording in order for that to take place. So that would definitely present some good opportunities, in my opinion, on multiple different positions. D'Angelo, go ahead.
I don't know, bro, if it's only me seeing this, but all of these developments and fundamentals from the geopolitical landscape, labor market data, these short-term hits just isn't having that level of effect whenever we're in a negative environment. It's not having an effect on the crypto landscape whatsoever. Like back in June when we had that news of I think it was Iran bombing Israeli nuclear facilities or military facilities. It was we were down like what 4 billion from the cryptocurrency total market cap, and then I think as soon after when we received news from Trump about ceasefire talks being in place, that's pretty much when everything turned around. And the more that I see these kind of events taking place, I'm just believing that given the fundamentals that's already in place from the tech, the institutions, it's just holding so much weight against all of these hits that could have this much of effect on the crypto landscape, unless I'm wrong.
No, I couldn't agree more, man. Your question and your input is always highly appreciated in this community. I love the questions and the conversation that you bring. What D'Angelo is talking about, if you guys don't know, is this event right here, right? Where it was like mid-June, where we had the Israel-Iran strike, and the market shed, I don't know, what was it, 150, $200 billion dollars. That was this downswing. And then right when the market had bottomed out, interestingly enough, it was exactly when we had a bunch of dovish Fed speakers. It was when Trump had announced ceasefire talks and implications, and the 12-day event that took place between Israel and Iran not ceased to exist, but de-escalated, and the market turned around significantly. I couldn't agree more that right now it's going to take a lot to deteriorate market sentiment, primarily because of institutional adoption, right? We're seeing institutional demand pick up at a very rapid pace. We're also at a very major turning point where the regulatory landscape is becoming a lot more clear. And so that is why I continue to say to you guys any day in my personal strategy, again, this is not financial advice, that we see a down day where the market is down 50 to $100 billion dollars, I'm taking advantage of that opportunity. And that strategy has held so much weight since 2022, which is exactly how I was able to grow a seven-figure portfolio without putting seven figures into the market. Instead of chasing pumps, understanding that intraday we can have these pullbacks, we can have these weekly events that take place that put the market into a $1 billion, $100 billion downturn. The people that have been taking advantage of those opportunities, your portfolio most likely to some degree mirrors mine and is up hundreds of percentages right now, right? So I'm going to continue to do that moving forward. I couldn't agree more with D'Angelo that we're in an environment where it's like if we do see a risk off induced event, that's an advantage moment to take opportunities and dollar cost average in to this market that we all know is headed trillions of dollars more to the upside, right? Not financial advice, do your own personal research. Um, so yeah, great question. Let's roll over. Let's continue to keep the ball going. D'Angelo, hope that rhetoric response kind of capped on what you believe.
Thank you.
Okay, cool. So XRP, same thing as the total cryptocurrency market cap, taking it week by week. Right now, last week's low comes in at $2.26. Interestingly enough, that is exactly where a buy delta sits. You can see that last week's low, Monday's price action is right here on XRP. This is the 12-hour time frame. And so same thing as the total cryptocurrency market cap, taking it level by level. If we want to see higher prices on XRP, which the most immediate sell deltas, the top three sell deltas on XRP right now come in at $3.02, which you can clearly see last week we had a slight hard time breaking. Sellers started to show their hand. Buyers started to fade out as the markets repositioned for the weekend and the week ahead. The delta level that comes in above that is $3.16, and there is not another delta that that Scalper has shared until $3.82. So with that being said, This week, if we can see these fundamentals on XRP, excuse me, and the total cryptocurrency market cap and the risk landscape play out, then the most ideal scenario on XRP will be one of three things. Same thing as the total cryptocurrency market cap. Sellers showing their hand at the beginning of the week, buyers possibly repositioning at discounted levels to defend. $2.26 will be the first area of interest or full-on retracement of last week's pump, where I would personally start to seek to possibly take some positions. That's just me. But that would look something like this, a retracement down into $2.26, buyers defending, taking XRP price back to the upside. Medium retracement, sellers showing their hand, pushing price down into about $2.56, buyers defending and pushing price higher. Scenario number three would be a clean break and retest above $3. A clean break and retest above $2, excuse me, $3.16. And that would open the door for XRP price to revisit $3.82. And that would put us well near, give me a second, let me zoom out on the weekly so it's clearer price action for you guys. And that would put us well above the all-time highs on XRP, right? Which I believe right now come in, according to TradingView, at about $3.31, right? So that would be phenomenal to see. And then keep in mind, there is a level in which I've been paying attention to that Scalper had shared months ago, and that was the $4.44 range, which is another sell delta that does come into fruition here above $3.82, right? But before we get there, we have to clear these levels and we have to see how the market sentiment is when we get to these levels, if we get there, right? So let's clear $3.82 as our optimistic bullish target for this week before we perceive any higher price levels. And we'll get there when we get there. And if we do, then we'll do an update for you guys, of course. All right. But those will be my levels to watch on XRP this week. A deep retracement down into last week's lows between $2.56 to 226 for buyers to come back in, defend, and push prices back to the upside, or a break and retest of $3, which will open the door for 316 or 382. To the downside, if we see any of these things this week unfold, we always have to be adaptive. We have to play these if-then scenarios. Why? Because nobody has a crystal ball. We're not sitting here projecting that this is what's going to happen. We're knowing how to react to the market conditions so they decide to change from risk on to risk off and understanding the environment that could be painted moving forward that is out of any of our control. We do not want to be the type of retail trader that marries a bias, stays stuck in positions, gets wrecked by institutions that actually move these markets and can adapt to changing market times because we're opinionated and married to some bias that we received by some influencer on the internet without credentials. Okay? So, what would hurt risk assets this week? We'll wrap this up and then we'll open the floor for discussion. CPI or PPI surprised us to the upside, triggering any inflationary fears. Fed speakers turning hawkish, warning of inflationary persistence or excessively upbeat economic data. The EU or any jurisdiction retaliating immediately to elevate tariffs or escalating trade war. Iran talks breaking down or Israel re-engaging in military action. Earnings reports disappointing, especially from JP Morgan, ASML, or TSMC. North Korea provoking or Russia-Ukraine escalation or conflict, elevating demand for safe haven currencies. And on the retail sales spectrum, any retail sales prints that come out excessively weak, sparking a recessionary fear, adding to growth slowdown fears. So with that being said, taking a look at price action, same thing. We'll start with XRP and work our way back to the total cryptocurrency market cap. If we cannot manage to break $3.16, meaning we start to see sellers showing their hand, defending at these prices, buyers try to make another attempt, they fail, we could see a full-on retracement to start to make our way back down into last week's lows as our first bearish targets. The first bearish target will be $2.56. The second bearish target would be 242. And if 242 breaks, a full-on retracement down into last week's low of $2.26 would be on the cards. If we get to these levels, I will then reassess market conditions and give you guys an updated analysis. As for the total cryptocurrency market cap, similar scenario, just taking a look at the weekly price action. Last week's lows are in play. If buyers start to stall out here, maybe they make one more attempt to poke above 2025 to 2024 highs. They fail at that. Sellers start to show their hand. We break bullish structure. The last higher low that comes in right now on the 12-hour time frame is hovering at about $3.6 trillion. A break of that, another failed attempt by buyers to push price higher, and continued bearish order flow would open the door for a pullback down into medium weeks lows last week, which come in at about 3.48 trillion before we could start to see buyers defend. If we break 3.48 trillion, buyers make another attempt, fail to break higher and make new net highs. Sellers again show their hand, breaking previous structure. We could see a full-on retracement back down into last week's lows. Well, then we will reassess the current market conditions and landscape. But keep in mind, that would be a drastic pullback. If we did see something like that, the market would need to shed over $300 billion. So we would definitely need to see a fear-induced catalyst, most likely, in order for this to even take place. Outside of that, those are the scenarios that we are paying attention to this week. This is the landscape that we are going to be mindful of moving forward. I will make sure to drop this report in the chat for you guys so that way you thoroughly understand it and keep you guys updated moving forward. I don't know if we're going to have a Zoom call tomorrow. We actually, excuse me, we might, so that way we can prep more specifically for the inflation that we're going to get on Tuesday. So I'll keep you guys updated outside of that. If there's any questions, I will leave the floor open